Well, there are many issues confronting the person on Struggle Street. We've talked about the energy crisis. It's real. And as you've heard me say, a function of disturbing policy directions by politicians swept up by ideology and not reality. I've talked already about where net zero emissions is leading us, and we've seen that in Europe, and the prospect of blackouts and higher electricity prices is not going to go away. But for today, it's interest rates. The Reserve Bank has delivered a second interest rate rise, and it's not over yet. The problem is that Dr. Lowe and the Reserve Bank are now playing catch-up. I've said many times, and I'll say it again tonight, we are not entitled to have faith in the judgment of the Reserve Bank Governor, Dr. Lowe. He should go. In fact, he should already be gone. I repeat what I've previously said. In November last year, Lowe said, and I quote, "It is still plausible that the first increase in the cash rate will not be before 2024. Also in November last year, he said, "I find it difficult to understand why rate rises are being priced in the next year," that's 2022 now, "or in early 2023. But now we've seen the first back-to-back 0.5% rate rise this century, the biggest rapid-fire interest rate increases since Paul Keating was Prime Minister in the early 1990s. Indeed, the new Treasurer Chalmers is the first Treasurer in 3 decades to see more than a 100 basis point rate rise, that's 1%, in a few quick months. The last was when Labor's Ralph Willis was Treasurer. The fact is we are copping this punishment now because Lowe and the Reserve Bank sat for more than 6 months on policy settings, no rate rises, when alarm bells were ringing. When Lowe made those statements last November, economic activity was accelerating, commodity prices were already climbing, and significant price pressures had already emerged. That is when there should have been interest rate increases to check inflation. But the Reserve Bank Governor, with about 1,342 full-time equivalent employees and paid about $1 million, couldn't see any of this coming. Last November, inflationary pressures were accelerating. Did the Reserve Bank and its governor have their eyes shut when the housing market took off astronomically, seduced by cheap money, and a Reserve Bank governor telling us it'd stay cheap until 2024? The credibility of the Reserve Bank and many economists is underwater. And this must have something to do with the composition of the 9-member board of the Reserve Bank, with 5 business representatives and 4 economists, including the Treasury Secretary. What homework were they doing last November? The Treasury Secretary shouldn't be on the board. He's appointed by the government. And if you want an independent central bank, you shouldn't have government officials on it. The unions are arguing they should be represented on the board. I wouldn't have a problem with that. How could that be worse than the current lot?